In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Apple meets Hollywood. After months, if not years of speculation, the iPhone maker unveils its streaming plans with a star-studded event from Steven Spielberg to Reese Witherspoon and even Oprah. A lot of excitement, but also still a lot of questions. Plus, Lyft continues its roadshow in San Francisco, this time met by disgruntled drivers, hoping to make their feelings known to executives and investors. Details on how, to their surprise, the company changed the locations of its event. And the SEC is urging a judge to take action against Elon Musk for flouting an agreement to take more caution with his tweets. We'll bring you the latest on the most recent controversy surrounding the Tesla CEO. But first to our top story. After weeks, months, actually years, let's be honest, of chatter, Apple finally revealed it is all in as a services company on Monday. The iPhone maker unveiled a news magazine service, a new video gaming platform, and with a parade of Hollywood elite from Jennifer Aniston to Steve Carell and even Oprah, a new premium video service to rival, they hope, the likes of Netflix and Amazon. Take a listen to CEO Tim Cook.
Our vision for Apple TV app is to bring together your favorite shows, movies, sports, and news and make them available on all of your devices. So you can spend less time looking for something to watch and more time enjoying it.
And perhaps the key to it all, Apple's brand new credit card in partnership with Goldman Sachs to facilitate payment for all of these new monthly buy-ins. The card is tied to Apple Pay, which eMarketer claims has been adopted by 39% of mobile payment users, just behind the Starbucks app. To discuss all of this from Cupertino, Bloomberg Tech's Mark Gurman is with us. He was on the ground at the event with me. Also, Bob O'Donnell was there, raced back up here to the studio to join me here, the president of Technalysis. So, Mark, I want to start with you. The celebrities were obviously exciting. We were sitting next to each other. You know how excited I was that Oprah was on stage. But despite that, what did we actually learn about the TV service, aside from seeing a lot of stars that we already knew were connected to it?
We learned pretty much nothing, to be honest, just to be quite frank. We knew which shows were coming every time that a new show went into development or was closing in on filming. Apple or the producers and actors and actresses involved would very publicly announce these deals. We knew that this was going to be some sort of subscription service. We knew it would be premium. We knew it would be high-end. What we didn't know were two basic things. How much would they charge for it? And we didn't know which devices it would be supported on. Now, Apple didn't come right out and say it, but my sense is that these shows are going to be available on the Samsung, Sony, Vizio, and LG TVs, in addition to the Amazon and Roku boxes, besides Apple's devices. But no word on if these are going to be on Amazon and Android, of course, phones and tablets. We also didn't know price. They didn't really talk about the price. I'm not sure they're 100% certain what the price is going to be. And they didn't really discuss pricing for the Apple channels. And by the way, same name as Amazon channels for the same basic feature. So we'll be waiting on those. That's what investors care about, prices and the comparison to Netflix and Amazon Prime.
Right, so Apple also offering a bundle of TV channels, which will include HBO, Showtime, Stars, Bob. They obviously pulled out all the stops with this announcement today.
Well, clearly they did.
It was really cool, and it shows the amount of priority that they're putting on these new services.
Absolutely, and it was a big splashy event, which Apple's very good at, and they do demo reels and splash things to get you super excited. But the question is, how are we going to feel about it tomorrow, right? Mm-hmm. And tomorrow, to Mark's point, we're going to go, wait a minute, like, you know, what exactly are we going to get from this? Because there are plenty of other options to get everything except Apple's original content. And so really it's going to boil down to how compelling can they make this total package, not just from a feature perspective, but from a pricing perspective. So the lack of pricing, to me, was very disappointing, and I think many other people as well. You know, and ironically, I don't think the TV service was actually the biggest announcement or the best announcement of the day. I think it was the credit card.
The credit card is kind of a big deal. Let's take a listen to Jennifer Bailey, the vice president of Apple Pay, who unveiled this credit card in the partnership with Goldman Sachs, MasterCard, also a part of it. Listen up.
And anytime you pay using Apple Card, You get daily cash, not a month from now, but every day. So every day you spend, cash is added to your Apple Cash card, which is also in the Wallet app. And it's cash, like real cash. So you can do anything with it. Every time you pay with your iPhone or Apple Watch, you'll get 2% of the purchase amount in daily cash.
So aside from Oprah, that was actually my favorite line of the entire event. It's cash, like real cash. Mark, this is something that we weren't necessarily expecting. Apple is getting into the credit card business, trying to change the credit card business, and actually a lot of things they're offering make a lot of sense, and consumers are probably going to be pretty excited about this. I mean, no fees, no late fees?
Yeah, they hit a lot of the pain points here. One of the foreign transaction fees, the late fees, the annual fee. I'm a credit card buff, and you could cycle through tons of credit cards to get the best sign-up bonuses and different cash back percentages to optimize in spending. But what we're seeing here is 2% flat rate through Apple Pay, and that's actually the highest in the industry from what I believe for a flat rate, but that's only from using it with your phone. So places that you have the physical card, which by the way, of course, looks like it comes right from Apple with the titanium and the laser etching, is only 1%. So if you're in an environment where you have lots of Apple Pay around you and you want a high cash back, I don't really think there's a better card on the market for this, but there's other cards that have better optimization for depending on places you're using the card.
So, Bob, how impactful do you think this card could be, given that the hope for Apple is that you're charging a lot of your new Apple services on this credit card?
Well, obviously, I think it's going to take a while. Like, people have to get used to paying with their phones still. That's why we see adoption still relatively modest. But, the joke I made with a couple of folks is the credit card proves that Apple's still best at hardware, because that was the coolest thing of the event, was the actual hardware. I mean, having a card with no numbers and everything else, it totally reshapes the way you think about credit cards and the app that goes with it. I mean, that to me was Apple at its very best. Taking something that's hard, has pain points, and then making it simple through the Apple magic. And the question is, how many other industries and capabilities are we going to see Apple do this on down the road? To me, that's going to be a bigger story long term. But I thought they did a great job of showing off how you deal with paying off things and things that people want to know, real world people.
So let's talk about something we do know the price of, and that is the news subscription service, $9.99 a month. This, of course, is building on what Apple has already done in news, but attempting to make it bigger. Take a listen to Apple's Vice President of Apps, Roger Rosner.
Over 300 great magazines, the Wall Street Journal, the LA Times, those great premium digital subscriptions. There's literally never been an offer like this before. If you were to subscribe to all of these individually, it would cost you over $8,000 per year. But with Apple News Plus, you pay $9.99 per month.
Now, if you look at the subscription price for the Wall Street Journal alone, it is over $20 a month. So make sense of this for me, Mark.
Yeah, there's some debate online. Apple is telling some people that you get full access to the Wall Street Journal, whereas the Wall Street Journal sent out a memo earlier today from its CEO indicating the subscription service would not cover the journal in its totality, that some business news would be exclusive to people paying that higher subscription rate directly from the journal. So until that's sorted out, can't really, comment completely on that. But I think Apple's probably going to get its way here. That's what they're telling people. I think that's what's going to happen.
So, Bob, these magazines, I mean, they look amazing on the iPad, but, you're talking about an industry that's already resource-starved. Do these magazines and newspapers actually have the staff to build out an entirely new Apple app experience to make it worth it?
It's a great question, Emily. And, look, like you said, they showed some great demos again, as Apple does, with the floating city video on the cover of National Geographic and all these cool things that brought the magazines to life. But there's a lot of work involved in making those happen. And, people have had the opportunity to get digital magazines before, and it hasn't really become a huge business. So I think this is a good thing that Apple is doing. I think it's interesting. I'm not sure it's a huge hit in terms of an economic impact.
I mean, the idea of it is certainly attractive.
It's
right?
attractive, but again, there have been, Apple bought a company that was essentially offering this service before. Now, mind you, they weren't Apple, and that does change things quite a bit. But there is a question mark of how much they're really going to get from the Wall Street Journal, as Mark pointed out, and from these other magazines, how long they can sustain the interactive versions of their magazines, and frankly, how many people are willing to pay for that, despite the supposed value, because at most you're going to read a couple of them anyway. That's all anybody could possibly do.
All right, Bob O'Donnell of Technalysis, thanks for racing back up here to join me on the set. Mark Gurman, as always, thanks for your excellent reporting leading up to this event, and I'm excited to see what comes next. We're also going to talk about Apple's new gaming subscription service, Apple Arcade, later in the show. All right, coming up, IPO fever. Pinterest files to go public, boasting more than 250 million monthly active users in its S1 filing. This as Lyft meets some resistance to its roadshow in San Francisco, and Uber chooses the New York Stock Exchange for its IPO. We'll discuss. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Welcome back to Bloomberg Technology. Now to Lyft, disgruntled drivers showed up at what was supposed to be Lyft's IPO roadshow location in San Francisco, only to find that no one was there. The roadshow had been moved to another location, which just so happened to not be besieged by protesters. Our Eric Newcomer, who covers Lyft for us in New York, is with us. Eric, what happened here?
Yeah, what a coincidence. You know, Lyft and its investors, as part of the roadshow, were supposed to go to the Omni, and sort of a group of protesters who, some of them drivers, were upset about how Lyft pays its drivers, were out to protest and sort of signal to investors that they needed to hold Lyft accountable. And then Lyft relocated to another location to meet with investors in a more private place.
So did Lyft move the location because of the protest?
You know, one person told us it was a matter of space. It does seem sort of a bit convenient that Lyft was able to sort of sidestep the protest. Either way, I think the protesters were able to get their message out by being sort of in front of a very public hotel where many people thought Lyft was going to hold its roadshow.
Have the issues of how Lyft and Uber treat its workers, treat its drivers, have those come up at the roadshow, and are investors concerned about them?
You know, I think, you know, how Uber and Lyft will have to pay drivers and compete over drivers is something investors are often thinking about it, though often it's sort of in the other direction, you know, a worry that competition is going to drive pay for drivers up, you know, when for Lyft and Uber to be more profitable, they would need to take a larger share of the bookings. So to some degree, investors can sort of be at cross purposes with drivers, or at least individual drivers, because of sort of the pay split. Now, overall, obviously, investors want to see Uber and Lyft grow the pie, and so that would mean sort of more economic opportunity for drivers as a class, but not necessarily sort of the share that they're taking on any individual ride.
Meantime, you're also reporting on Uber's planned deal to buy its Middle East rival Careem for $3.1 billion. You were the first to report that this deal was in the works, and now they're making it official?
It's sort of final reports here that the deal could be close. Sort of my colleagues reporting this $3.1 billion price tag, which would mean that Uber is, for sort of, you know, in a rare case, expanding and sort of taking over the competition instead of selling out like it did in China, Southeast Asia, and Russia. So this is soon going to be a moment where Uber is sort of asserting itself in the Middle East ahead of a planned sort of public filing in April.
All right, Bloomberg's Eric Newcomer for us on the roadshow with Lyft. Thank you.
Thank you.
All right, now I want to get to the larger IPO market because it is on fire, and it's not just Uber and Lyft. Pinterest also filed its S1 on Friday. Here to discuss, we've got Jackie Kelly, EY America's IPO leader, and in New York, Bloomberg's Elizabeth Fournier, who covers the IPO market for us. Jackie, Friday was a big day. We got Pinterest. We also got Zoom Video. In addition to the Mueller report, we just didn't know where to start. what is your take on which of these IPOs will have you think the best start out of the gate?
Yeah, we're really, really excited about the fact that we really think this is going to be the best year for IPOs we've seen in ages. And
IPOs or tech IPOs?
well, I'd say both. I mean, I think the tech IPOs are really going to get the market moving, but we have IPOs across the board looking at the tech group saying, if they perform well, I'm going out too.
So what about the fact that Lyft is losing half as much money as it's making? Are investors concerned about that?
Investors are excited about getting parts of the deal. Actually, the bigger concern is that they're not going to get as much ownership in these companies that they want to. These offerings are going to be oversubscribed. Retail investors, our traditional institutional investors, everyone is excited about the deals.
Elizabeth, is that what you're hearing as well?
Yeah, absolutely. I mean, you see with the roadshow for Lyft today, it got moved, but the sort of sentiment coming out of the investors that we were able to speak to at the sort of relocated place was very positive. They like what the company is saying, and as we've said, it's oversubscribed, and that's going into the sort of the second week of marketing here. They're in a pretty good position.
What about Pinterest? We've talked a lot about Uber and Lyft, Jackie. What do you think about Pinterest?
We have a number of unicorns besides, the ones that we're talking about today that are in the registration process. This is a very big pipeline of companies. We had companies planning to IPO in 2020. They're moving to 19, late 19, moving up to late spring. There is a big group. We're focused on a couple we're hearing about right now, but there's a big group in the pipeline.
Right. We're also expecting Slack potentially to go out later this year. Elizabeth, Zoom Video quietly filed a prospectus on Friday that, as I understand it, was pretty strong.
Yeah, absolutely. And they had some pretty good numbers. And, you were talking about Pinterest there as well. They're one of these companies that, yes, they're still making a loss, but that loss has narrowed. So you're starting to see this crop of sort of not quite profitable, but slightly sort of more friendly numbers coming at you from the unicorns. And with the Zoom, we've had some really interesting sort of analyst comment today saying that once that starts trading, it could shoot up to a valuation sort of north of 10 billion pretty quickly.
Wow. So, Jackie, what do you think is going to set these companies apart? I mean, they're not all the same. They're all very different. Even Uber and Lyft are very different.
And I think that's what's really great about this, is we really have a diverse group of companies coming to market. Now, what is common about them, and I think this is a trend we're seeing in the industry in tech, is these companies, a lot of them are platform-based companies that have options to take the platforms they have today and really diversify their revenue streams, really hit a very broad market, not just consumer. A lot of these are very heavy consumer-facing, but they've got B2B plays, some more early stage, some more late stage. All of them have really interesting growth stories.
So if investors are concerned, and there must be some concerns, what are they concerned about?
Well, I think that what's going on right now is the markets are almost up back to some of the peak levels, right? These companies are coming out in times where markets are strong, volatility is low. We've gotten great news on jobs reports, interest rates, everything. There's a lot of positive momentum. It's a great economy, but folks are concerned about, can this hold? And
Elizabeth, there was a big market drop on Friday, some recovery today. Of course, some political issues going on with the debate around the Mueller report, but trade talks restarting between the United States and China. I mean, how is the political environment going to impact investors' appetite for these companies?
Well, I think the political environment has already impacted the IPO pipeline this year. I mean, we had the shutdown at the beginning of the year that really set this whole process back by a good couple of months. So that's why we're seeing so much activity sort of rushing now. And with the IPO market, we always talk about a window. We talk about a good opportunity for companies to get out there and sort of get investors when they're really hungry for these new stocks. There's a huge amount of supply coming into the market. And I think the real question with how markets are looking is whether the demand is going to be there when they get there. But if you think back to sort of when Alibaba listed, that was the last time that people were talking about a market top and whether we could use IPOs as some kind of indicator of that. It didn't happen then. So I think in terms of what's going to happen now, it's kind of wait and see.
So I have a chart here in my Bloomberg which shows sort of the dot-com bust in the rearview mirror. We've come a long way up from some lows. But I wonder, Jackie, is there anything that could set this off track? I mean, is there a chance that, Lyft or Uber or Pinterest could be the next Snap and a company that goes out with great fanfare, but then, the market cap is now a third of what it once was? Because a lot of the optimism just didn't pan out.
I think what's going on right now is that these companies have been able to look in the rearview mirror on companies that have gone out in the last 12, 24 months. Most of them have focused on, I'm going to be presenting metrics to the market, not just financial, but non-financial. Let me make sure that that is backed up. Let me make sure that I have robust forecasting processes and systems that I can support both from non-financial and financial metrics. There's a lot of focus on growth stories and more. So these companies are coming to the market very well prepared.
But could anything throw them off?
Market conditions could definitely throw things off. The growth plans are aspirational. Many
ambitious.
Of them. They're
sure.
ambitious. So investors need to take a long-term view. This is not a short-term investment. This is a long-term investment.
All right, Jackie Kelly, EY America's IPO leader. Thank you so much. And Elizabeth Fournier, who is pounding the pavement on these IPOs for us. Thank you, Elizabeth, for your reporting. Okay, still ahead, YouTube bows out while Apple jumps in to the TV race. YouTube pulling back from its grand plans to produce high-end dramas. We'll explain more next. This is Bloomberg. YouTube is said to have canceled its plans for a slate of high-end dramas and comedies. The move is a step back from the company's designs on a paid service that featured Hollywood-quality shows. Bloomberg has learned the decision is reportedly due to the high cost it would take to compete with the deeply entrenched players like Netflix and Amazon, and now, of course, Apple. And without it, YouTube is still making a lot of money the old-fashioned way, on ads. The Supreme Court will let a lawsuit against Amazon Zappos unit go forward. The online shoe and clothing retailer had appealed to the High Court to dismiss the suit over a 2012 hack that exposed the personal information of 24 million customers. Zappos argued unsuccessfully that the customers couldn't sue without proof of concrete injury, such as the impending misuse of their information. Viacom surged the most in 7 months after the media giant resolved its contract dispute with AT&T. The deal staves off a blackout that would have kept millions of pay TV customers from seeing cable channels like Nickelodeon and MTV. Tensions between programmers and carriers have increased in the age of cord cutting as providers try to squeeze more money from a shrinking pool of subscribers. Coming up, Apple in Hollywood, more on its plans to take on Netflix, Amazon, Disney, and the streaming world, along with Oprah. Next. And Elon Musk battling it out with the SEC. We'll have the latest update on the latest controversy. All of that coming up. This is Bloomberg. Bloomberg Technology. I'm Emily Chang in San Francisco. Back to our top story, Apple's streaming vision. The iPhone maker introduced one star after another to announce Apple's plans to win over your content dollars. Oprah, Reese Witherspoon, Steven Spielberg, and Big Bird, just to name a few. Its new video service is called Apple TV Plus. And outside of Apple-only content, it will tap into outside providers like HBO and Showtime. To discuss, at Apple's headquarters in Cupertino, California, we've got Carolina Milanesi, a principal analyst at Creative Strategies. In New York, we've got True Optics CEO Andre Swanston. And in studio here, Bloomberg's Lucas Shaw, who, of course, covers Hollywood for us. So, Lucas, what surprised you about this offering?
On the plus side, just the level of star power. A lot of tech companies or other companies, when they start with media or streaming, they have to prove themselves to the industry. Most of the people in Hollywood already know and love Apple, and so as we saw in some of the footage, you had Oprah Winfrey, Steven Spielberg, J.J. Abrams, some people who still won't work with Netflix. On the downside, not a lot of information or details. We don't know how much the new TV Plus service is going to cost. We don't know how they're going to roll out these different shows. We don't know exactly what different devices they're going to be on. There's a lot we still have to figure out.
Even Tim Cook got a little starstruck when he was thanking Oprah for showing up. Carolina, the stars aside, how much of an impact do you think this new streaming services push will actually have on Apple's bottom line? Tim Cook's actually wiping a tear away, I believe, as he hugs her. Okay. Carolina, how much of an impact do you think this service could actually have on Apple's bottom line, and how well will it compete with the likes of Netflix?
Yeah, I think that given one of the few information aside from prices that we got today was the fact that the app itself, and so you're assuming their services and their content is going to be available to 100+ countries when it's available in the fall. It shows that they are really going for the broadest addressable market that they can reach. Also, the fact that the app is going to be available not just on Apple hardware but on smart television, I think that's another indication that the opportunity is bigger than the install base of users that have there. And yes, Tim Cook did get quite emotional with Oprah at the end, but I think if you look at the content or some of the stories that they talked about today, there's a lot of curation on the content that they want to distribute and get conversation on difficult topics as well.
Now, Apple has been very secretive about its streaming plans up to this point, and there's still a lot we don't know. I mean, some of my sources in Hollywood, Andre, have told me we don't really know what Apple's doing. We don't know if these new shows are going to be a success. I mean, what do you think? Some of their original content thus far has totally flopped. I mean, even if a show has Reese Witherspoon and Jennifer Aniston and Steve Carell and is called a morning show, I mean, that sounds pretty interesting to me. But do you think Apple can really pull this off?
I think they can. I think one of the things that was most interesting about today is just the overall shift that Apple is showing from being typically mostly a hardware company to really a service and provider of solutions. And so it wasn't just the Apple TV Plus, it was also Apple Arcade. There's a lot of things that Apple is doing to make their devices compelling and differentiate them from other services, and then being very aggressive in terms of making them available other places. And so, going back to your specific question about if they're going to be successful, Apple News is going to be on nearly 100 million users by the end of this year. Apple Music is going to be well over 60 million by the end of this year. So even if they're half as successful with the Apple TV Plus rollout as they've been with those other services, it'll be pretty compelling. And furthermore, just the sheer pressure that it puts on solutions like Netflix to spend even more than that they have already been spending with the pressure from Disney and Hulu and others that's coming is really critical for people to realize.
Now, even though there are still a lot of outstanding questions, Oprah put it very succinctly and sort of summed up why this could be so big. Take a listen to what she had to say.
The Apple platform allows me to do what I do in a whole new way, to take everything I've learned about connecting to people to the next level. Because they're in a billion pockets, y'all, a billion pockets.
A billion pockets, y'all. Lucas, do you think Netflix is feeling the pressure?
I think a little bit. I think but the CEO of Netflix, Reed Hastings, has been pretty consistent that on the one hand, everybody can succeed, or a lot of different companies can succeed. HBO has continued to grow as Netflix has grown. Hulu has grown as Netflix has grown. There can be space for a lot of winners. And so he's not going to believe that Apple coming into the market kills Netflix or is a problem for them. But if you also listen to him speak about kind of competition, it's about screen time, it's about leisure time, and there's no question that Apple can eat into that. And that could be a problem for Netflix, especially because Apple can use its devices to push its services. And I think Andre made a really good point, which is that Apple can introduce an okay service and probably still get it to tens of millions of customers. Now, again, with music, the success of Apple Music has not blunted Spotify. Spotify has actually tripled or quadrupled in size since Apple Music came along. And my guess is we'll see something similar play out in video where Apple can succeed and Netflix can succeed too.
Now, Netflix isn't going to be a part of this, though you can access Netflix through the current Apple TV storefront right now. So, Andre, what do you think this actually means for a Netflix? Let's talk about them because they're the giant in the room.
Yeah, I would say that the two biggest losers today were Netflix and Roku. And so the reason for Netflix is because of there's so much fragmentation in over-the-top and connected TV that content discovery is becoming more and more critical to help people discover and monetize their content. And so if all the other services and the originals from Apple will be easily found right on the home screen of somebody's Apple device, as well as through the app and across other devices, and Netflix is left out of that, then people have to actually log into Netflix separately to discover the new content. And new original content is going to be more and more critical to Netflix's future because they're losing a lot of the content from Disney and Warner Media and others. And why I think I'd be concerned if I was Roku, even though they were included as one of the devices where the solution will be available from Apple, it kind of puts them in a place of, again, just being another device manufacturer, where they've really been working very hard over the last year or two to be this operating system of choice and to help with content discovery. And they're kind of ceding back, I think, to just being more of a provider of other people's apps.
So, Carolina, what are you going to be watching over the next year to see, for clues, to see if Apple can pull this off? I mean, certainly the sheer size of the platform gives Apple a huge advantage, even if the service isn't, the favorite service.
Specifically for the TV content, I am going to be looking for more than the stars that we saw today, right? I think one of the things that we've seen Apple do over and over again with content from the App Store to even music is support smaller names, smaller franchises. And so given that they can't always make the big hit with big Hollywood stars, who else are they going to support and how much of original content we're going to see? The other critical part, of course, is pricing and how is Apple going to be bundling some of these new services that they have. Hard to see it now because they're all going to roll out at different times. But, a year from now when we're going to be assessing what their overall portfolio is, how much as a user can I buy with one purchase? Can I bundle my TV service, my music service, my news service, and my cloud all in one easy payment?
All right. It is going to take some time, and we're going to be charting the progress as all of these new services roll out. Carolina Milanesi of Creative Strategies, True Optics, Andre Swanston, and our very own Lucas Shaw. Thank you all. Okay, coming up, Apple coming after gamers with its own subscription service. How Apple Arcade plans to take on the likes of Google's recently announced Stadia. That is next. This is Bloomberg.
Cliff edge delayed. The European Union gives Theresa May another 2 weeks to avoid a no-deal Brexit.
We are now at the moment of decision, and I will make every effort to ensure that we are able to leave with a deal.
Sticking with Apple, the iPhone maker also added gaming to the suite of new services announced Monday. The subscription service, known as Apple Arcade, will be integrated into the App Store and include more than 100 exclusive games. This just days after Google unveiled its own cloud gaming platform. Joining us from London to discuss, Bosa Studios co-founder Henrique Oliviers. Bosa is an independent game studio planning to release 2 new games on Apple's Arcade gaming platform. So, Henrique, tell us a little bit about what Apple Arcade means to you and your games. Like, how will it change your business?
Hi, Emily. Well, it's a fundamental transformation because enable independent developers and publishers like us to compete in equal footing and reach an audience that will be more laid back, more involved with the games we make. They will be certain that all the content that they are offered are content that is free from ads and free from microtransactions, which enable us a creative freedom that we wouldn't have necessarily on the regular App Store and still achieve a good result economically.
A bunch of other game makers like EA, Activision fell on the announcement of Apple Arcade. How does it compare to something like Google's new subscription streaming offering, Stadia?
Oh, it's a very different proposition altogether, right? Here we are talking about you being relaxed on your living room, perhaps with your family, sharing devices, and playing games which are resident inside those devices. And you have a curated selection of games which you will have access to freely. Stadia is a streaming service, which is a very different proposition altogether and can serve different niches of market. Can serve since the hardcore, in the high end with top monitor screens, up to mobile devices. But the games are not running on the devices themselves. They're just being streamed from Google's data centers into the devices.
Now, can you share any details on how much this is going to cost? Because we still don't know.
No, I cannot. You will have to ask our friends in Cupertino to get those kind of details, I'm afraid.
All right, we're still waiting on pricing information for Apple Arcade. But you also produced one of the first games for the Apple Watch. How impactful was that for your company? Is that a big gaming platform?
No, it wasn't. But it was very interesting to experiment with it, right? When the Apple Watch first came around, we were trying to figure out what people are actually going to use it for. And it turns out that people prefer things like fitness and health monitors, but also music and small notifications and so on. There are still very successful games in that platform, but we don't produce games for the Apple Watch anymore. But any new proposition that comes to the market that presents us with the chance to connect with new audiences and try something new, something that hasn't been done before, is exciting for us and for independent developers like us, which are always on the hunt for the next big thing, right?
So Apple has, for a long time been talked about it as a company that has a lot of potential in the gaming market, a lot of untapped potential. How do you think Apple Arcade could really or will change the gaming market?
I think there is a potential here to be a transformational step. On the traditional game market in the App Store, you have very little movement on the top 10 most popular games, right? We're talking about these big franchises that are generally free to play, which spend a lot of money into marketing efforts to buy people into the ecosystem. So the more people that buy the game, the better they rank, and the better they rank, the more people buy the game, and this self-fulfilling prophecy, right? For independent developers, it's very difficult to break into that. The second aspect is, of course, how you relate to the game media that will be offered on things like Arcade. We are talking about an ad-free experience and an experience that is focused on the player behavior and how the player interact with the game, rather than how you monetize the game. This is a very fundamental shift in the approach of how game developers create content for these brand new audiences, and one that I think is going to be the premium, the first choice for people who are discerning about what kind of games I want to play, what kind of experience I want to have, and what kind of emotions I want to feel when I'm engaging with an interesting title.
All right, well, we'll be watching to see what you and Bosa Studios deliver for the new Apple Arcade platform. Enrique Oliviers, thank you so much for joining us. Still ahead, the SEC is calling on the federal court to hold Tesla CEO Elon Musk in contempt. How the decision could impact Musk's reign over the electric car maker. Next, this is Bloomberg. The Elon Musk SEC battle continues. On Monday, the U.S. regulator asked a New York judge to decide whether Tesla's CEO violated his settlement agreement without holding a hearing. The SEC is requesting that Musk be held in contempt after he tweeted a production forecast that it claims hadn't been pre-approved as required by the settlement. Musk has defended his Twitter use, saying the SEC's request relies on radical interpretation of the order. Joining us to discuss Bloomberg Business Week's Max Chafkin. So, Max, the story continues to develop. What's the very latest as of today?
So the latest is that the SEC has responded to Elon Musk's response, saying that the judge should just offer a hearing on this and decide whether or not this tweet from February that Elon Musk put out there, apparently without the assistance of his quote-unquote Twitter sitter, that this is the person who is in theory responsible for vetting tweets from the CEO of Tesla to make sure that they don't contain any material information, whether that tweet was okay. Musk says it's okay based on the fact that it kind of echoed something that Tesla had already put out there, and that it didn't move the stock price or anything. The SEC says it's clearly not in the spirit of the agreement that he signed, which was a settlement in connection with this 420 tweet, the plan, which then nothing happened, to take Tesla private.
Are the experts weighing in yet on who's got the better argument here?
It kind of feels like the subtext here is that, the particular tweet that we're talking about where Elon Musk said that Tesla was going to make 500,000 cars this year, which he then corrected and said, well, actually, it's the run rate for 2019, I think, starting in February. It feels kind of like basically like a ticky-tacky type complaint. The thing is, what's underlying it has been sort sort of a pattern of kind of a lack of respect, maybe you might say it, for the SEC. Elon
Maybe, or
Musk,
definitely. I mean, he has said the SEC is basically an embarrassment.
Right, yeah, he called it the Short Seller Enrichment Commission. And the SEC is kind of in a weird position because, their job is to protect shareholders. And I think most shareholders, for all the antics, still want Elon Musk to be CEO, still think the company is worth more with him as CEO. So it kind of puts the SEC in a box where they can try to, wrap him on the knuckles again, but the real punishments that they could enact, which be, banning him from being CEO for a more amount of time or banning him from the board or something like that, those feel like not really realistic punishments given what's going on. So it's sort of hard to see how this shakes out.
So what's next? What next move are we waiting for?
Well, we'll see if the judge requires a hearing, or maybe the judge will just come out with a ruling, either basically saying, yeah, Tesla's right, this wasn't that big a deal, or coming up with some additional sanction that she could put on the company. In the background, there's all this question that Tesla's stock price has been very volatile, and there are lots of questions about demand for these cars. And Tesla has been sort of changing the price every couple of days, it feels like, of the Model 3, which is their mid-range sedan. And we're all kind of just waiting to see how all this kind of, I don't know if you'd call it negative press, but kind of chaotic press affects the demand for cars, which Tesla really needs to have a good business going forward.
Absolutely. All right. Bloomberg Business Week's Max Chafkin, as always, thank you for weighing in and keeping us updated on the play-by-play between Musk and the world. All right, I want to bring in our Bloomberg Tech Senior Executive Editor now, Brad Stone, to wrap up the day's big Apple event. And Brad, something we haven't talked about yet this hour is how with every one of these new services, Apple said, and with this service, you get your privacy and your security. With this credit card, we don't know what you buy or where you buy it. We don't know with this magazine subscription service what you read. We won't tell anyone. And so do you think that alone will attract customers?
Tim Cook has been drawing that distinction, that juxtaposition with Facebook and Twitter for a very long time, right? He made the argument with the new service as well. They're not going to track what you read. They're not going to serve up tailored ads to you elsewhere across the web. Is it a difference maker for the majority of people outside the coastal bubbles? I don't know. I haven't seen much in the way of data that it is. I think they could have been better served with adding a little bit more specificity to some of their announcements today. What do you get with the News Plus service? Do you get all the content from partners like the Wall Street Journal or that TV Plus app? Lots of questions now as people kind of puzzle over today's announcements. How much is Apple charging? What is it? To what extent, are you getting new programming from Apple and other content providers? So those, I think, are ultimately the questions that will make or break these services.
Are you saying that Oprah is not enough?
They brought out the firepower. Oprah and Steven Spielberg and Reese Witherspoon. It was a very impressive, but I think now the people that watch Apple closely are puzzling over it, looking and wondering why some of these services appeared to be so half-baked in their introductory day.
That said, I wonder if the sheer size of Apple's platform at this point means that so many people are just going to use these services anyway. Like Apple Music.
It is a big ecosystem.
Well, maybe I'll use it because it's convenient.
But remember, that's never been enough. I mean, Apple Music has some 50 million, subscribers, far fewer than Spotify. It's one reason why they've been pushing Apple Music onto other platforms like Alexa. They want to do the same thing with the Apple TV app, putting them on Samsung TVs and on Fire TV. So clearly the ecosystem is not enough. I mean, the minority of smartphone users have iPhones. And so Apple needs to kind of change its DNA and get these apps onto other devices.
That said, I mean, Apple is saying this business, the services business, can get to $50 billion by 2021. I mean, how important are these new offerings?
Hugely important. Yeah, as a growth company. I mean, device revenue, iPhone revenue fell in the fourth quarter, right? Investors have always been pinning their hopes on the maturation of this services business. It's been growing 25 to 30% each quarter. It's why certain things like the new Apple credit card look so promising. Apple pushing deeper into people's financial lives. I thought that was one of the most promising announcements from today. And look, I mean, Apple fans are going to want an Apple Card, right? And now,
it is made with titanium.
And we can argue as to how low those interest rates are or how innovative the card is. Other banks and other companies offer something very similar.
I actually do have a chart in the Bloomberg right now that shows iPhone revenue falling along with the global smartphone market. slowing down, which just goes to show just how important all of this is for Apple to pull off. But the question is, you know, we still don't know a lot. You know, even with the teasers of the new original shows, there's not much there.
You know, I think, and it reinforced my belief recently that Apple isn't being all that authentic in these recent event days. You know, the Apple TV app is basically, they've redone an app that's been sitting on people's iPhones and iPads already for years. And so it's like, you know, a big deal about a renovation of a service that already existed. Now they're moving further with bringing in channels like HBO and Showtime. You can subscribe to those channels a million different ways. And now Apple is getting the original content bug like YouTube and Hulu and Netflix and Amazon have before it. It's not necessarily innovative. I don't necessarily see what they're doing that other companies haven't done before.
And we'll see if these shows can be hits, because what Apple's done so far has not. But a big hit can make a big difference. Okay, Brad Stone, our senior executive editor for Bloomberg Tech, thank you so much for wrapping it all up for us, with so much authority. That does it for this edition of Bloomberg Tech. We are, of course, live streaming on Twitter. As always, you can check us out there at Technology, and go to Bloomberg.com for all the latest roundups on what happened at Apple today.